So in today's video, I want to show you guys two stocks that could potentially make you a lot of money in the foreseeable future. These two stocks are also going to pay you out a pretty good dividend yield. So make sure you stay to the end of the video because the last stock that I'm going to talk about is going to pay you out almost an 8% dividend yield. So you don't want to miss that. So that being said, I value your time. Let's get right into it. All right, so the first stock that I want to talk about is United Health. For those who don't know, United Health is one of the biggest health insurance companies in America or even potentially the whole entire world. And currently right now, this stock is going to give you a dividend yield of almost 2.5%. So this isn't anything super high, but it's not bad at all for a company to be paying out this type of yield. But what attracts me so much to this stock right now is the fact that it's still significantly down from the all-time highs that we saw in the past, right? So it almost hit $600, sometime in the past. It actually went over $600 here, but it's still significantly down from those all-time highs that we saw. So let's talk about why this stock has such a massive drop and why I believe that in the next couple of years, this stock could be trading back in that $500 range that we've seen in the past or even potentially reach a new all-time high. So a lot of things happened to this company back to back to back, right? A lot of negative news happened that caused the stock to drop so much. So a couple of examples on the screen right now. For example, right, the company had bad earnings and also lowered their guidance for the whole entire year. So obviously a company doing this is going to cause a lot of negative sentiment, right? And cause investors to lose confidence in the company, which is going to cause the price to drop, as we're seeing in the price action of United Health. So it looks like the CEO also resigned. They had the DOJ investigation. They had a cyber attack, increased costs, and declined margins. So, for example, looks like the margin went from 6.2% to 3.6% between 2022 and 2024. And also, there's a lot of negative sentiment going on within the company as a whole, right? But even with all this negative news, I want to explain to y'all why this stock still has a high potential of going back to previous all-time highs that we've seen in the past. So reason number one is because Warren Buffett's company, Berkshire Hathaway, bought 5 million shares, approximately worth $1.6 billion of this company. Now, this is very important because anytime Berkshire Hathaway invests a lot of money into a stock, more than likely that stock is going to go up in the foreseeable future. But most importantly, it's going to regain investors' confidence in the stock because of how successful Warren Buffett's investments has been. And this is exactly what happened. So basically when this happened, the stock went back up to the 300 range and it's gradually been going up since then because now investors are having a lot of confidence in the stock because Berkshire Hathaway bought into it. So another reason why I think this stock could potentially go back to new all-time high is because this company still has really good fundamental financials. So let me explain what I mean. If we look at their income statement from an annual basis, right, from 2021 to 2024, right, you guys see a drastic increase in total revenue. We're talking about a company that made hundreds of billions of dollars in revenue, right? You guys can see operating expense has increased over time, but most importantly, we take a look at the net income. You can see that this has also drastically increased over time. Now, we did see a decline from 2023 to 2024, but overall, the company's still making a lot of money. And we take a look at their balance sheet, right? It's a similar story, really good fundamental financials. You see an increase from 2021 to 2024. You look at their total equity, this is also drastically increased from 2021 to 2024. And lastly, we take a look at the cash flow. You guys can see that operating cash flow is still positive. Yes, it did have a decline from 2023 to 2024, but it's still making a lot of money from the day-to-day operations. And most importantly, we take a look at their free cash flow. This company still has a lot of free cash flow, which is money they can use to just keep on growing and developing their business. So basically, you got an undervalued company with really good fundamental financials that's going to pay you 2.5 dividend yield. On top of this, right, this stock still has a lot of potential upside because it's still down a lot from its previous all-time highs. So not only are you getting paid a good dividend yield, but you could also make a lot of money from the stock going back up. Now, this isn't something that's going to happen overnight, right? It may take a couple of years for the stock to get back to those higher levels that we saw in the past. But overall, it's a good investment, right? This is why Berkshire Hathaway put in almost $2 billion into this company, into this stock, right? Because they believe in where it could be in the future. So let me know what you guys think about the stock. I think it's a pretty good bet. With that being said, let's talk about stock number two. So the next stock I want to talk about is UPS. For those who don't know, UPS, they basically just deliver your packages. That's their whole entire business model. And currently right now, this stock is going to give you a dividend yield of almost 8%, which is extremely high. So the only caveat to this is the stock has been going down nonstop since 2021. And I still believe that it could potentially be a good buying opportunity. But let's talk about why the stock has been going down so much in the past couple of years. So similar to United Health, this company has seen a lot of bad news, which has led to negative sentiment, causing the stock price to drop. So a couple of examples of this are weak volume of revenue, macroeconomic and geopolitical uncertainty, focus on higher margin businesses, and Amazon volume reduction, increased costs, analyst concerns and downgrades, disappointing earnings. And if we summarize this, the stock has been under pressure due to a mix of declining package volume, rising operating costs, especially from the union contract, and significant uncertainty in the global trade environment. all while the company undergoes a strategic shift toward more profitable, specialized logistics service. So now we take a look at the company's fundamental financials. This is also one of the reasons why the stock has been going down so much in the past couple of years. We can see that from 2021 to 2024, there is a decline in total revenue. So the company is still making a lot of money, right? $91 billion in 2024, $90 billion in 2023, and so on. But most importantly, we take a look at the operating expense. You guys can see that this has also fluctuated over time within the past couple of years. When we take a look at the net income, you guys can see a drastic drop in net income from 2021 to 2024. So this isn't a good sign, right? It's showing that the company is not bringing in as much money as what they used to, right? It's not profiting as much money as what they used to. Now we take a look at the balance sheet. Total assets has basically fluctuated within the past 4 years. Liabilities, similar thing, kind of fluctuate within the past 4 years. Total equity is down from 2022, but overall it's still just fluctuating, right? So not really a bad balance sheet, but you don't see a lot of growth going on within the company. Now we take a look at the cash flow. Looking at the operating cash flow, the company is still making money from its day-to-day operations, but you guys can see a significant decline from 2021 to 2024, right? So the company's not making as much money from its day-to-day operations from what it used to back in 2021. Now, most importantly, we take a look at the free cash flow. You guys can see that there is a significant drop in free cash flow from 2021 to 2024. So the company still does have free cash flow, right? Still does have money that it can use to keep on growing the business and growing the company. So you guys can see UPS stock does possess a little more risk, primarily because no one knows how much lower the stock is going to go. On top of this, there's not a lot of investor confidence within the stock and the company. But the good thing is that this company is going to be paying you a really high dividend yield. On top of that, the fundamental financials aren't really that bad. The company's still profitable and they're still making a lot of money. I just feel like they need to have a good earnings report and raise guidance or the future outlook to regain investor confidence. So not only are you buying a stock that's super beaten up within the past 5 years, so let me know what you guys think about the stock. Let me know if it makes sense to you. As always, make sure you do your due diligence and only put in money that you're willing to lose. Let me know the stocks that you guys are looking forward to getting into. And with that being said, I'll see you guys in the next video.